Mic check, 1, 2. Mic check, 1, 2. Let me know in the chat. All right, good morning, everyone. Sounds like the mic check went well in the first initial shot there. Happy to be with you guys this morning. Love doing this stuff. It's been really fun over the past week. Let's go ahead and bring up our economic calendar here. We're going to start in the order we always start today. And what we're looking at here, the big news, obviously, the one that everyone cares about. Let me also fire up the annotation tool. Here we go. The big one everyone's talking about is simply going to be the 2 p.m. FOMC meeting minutes, okay? And obviously Jerome Powell will be on the mic around 2:30, okay? So that's definitely something to be on the lookout for. This is going to spur a lot of volatility in the marketplace, but it's not necessarily a directional volatility that we can anticipate, right? I think it would be a fool's errand to try to predict higher or lower headed into the announcement. Once we get some clarity on what's going on there, maybe, if everything's on par with what we already assume about the FOMC and their stance on rates and inflation, then maybe it's a move higher if there's nothing sort of out of the ordinary, okay? So maybe that's a possibility there. If not, if there are some surprises that come from today, then definitely look for lower, right? That's essentially how this one is going to work. If the market's surprised, look for lower. If we're not surprised, probably neutral to maybe higher in the sense that, there's no wrenches coming down the pipeline. So that's the big one, 2 o'clock and 2:30 when Jerome Powell actually gets on the microphone himself. That's when we want to either be flat or just accept all of the risk that we have in any of the trades that we're in currently. You don't really want to be, over leveraged at that time because, like I said, you're just going to get a ton of volatility. So that's the big thing to talk about today. Jonathan, in terms of time zone, everything here is New York time. Okay, so Eastern Standard Time, EST. New York time, New York Stock Exchange is in New York, obviously, and that's kind of where all these numbers are coming from. So that's what these are, okay? So Eastern time. Let's continue along and talk about earnings. There are some big things going on in the market that we can get into eventually. The big one is Roblox after the close from yesterday, Upstart after the close from yesterday. And then this morning, we had Shopify, and we're also going to take a quick look at the trade desk. Crocs, Trades by Matt, shout out to him. Hopefully he gets his sponsorship soon. If you know what I'm talking about, you know what I'm talking about. And then after the close today, we're going to have Nvidia, and that's going to impact likely everything that goes on with the semiconductors. Look at AMD, even Applied Materials right underneath, TSM. All of the semis are likely going to follow whatever Nvidia does there. So those are the big earnings plays for today. All right. Let's call that a wrap here. Let's get on over to our futures. We'll save market profile for just a second here. We're going to come on over to the regular screen. Here we are. And guys, by the way, if you enjoy these live streams, if we should do this whole thing over again next week, let me know by giving the video a thumbs up. That's the easiest way you can communicate to me that this is worth my time. George, or I'm not sure if it's George or Jorge, you can correct me in the chat. Yes, we are going to take a look at Facebook. It had a little bit of a mishap this morning, right? So we'll talk about that. In terms of our futures, though, how are we opening, right? These are always the same three questions that we always ask. Are we opening in or out of range, aka a gap or not? As of right now, we are opening in range. We're opening outside of value, though. Notice that value area is from here to here. We're slated to be opening slightly underneath. It's not a huge imbalance, but just something to be thinking about. We are making new overnight lows as I'm talking, so I need to update my level here. So we'll say that we are opening near or at the overnight lows, which is going to give us some sort of indication of how the morning reaction may go. And then in terms of, let's see, the last question is, of course, how is the overnight inventory, right? So our close was right here. I would say we're almost 50-50 given this little down move here. At first, very balanced back and forth, either side of the close. A little bit of a net long move there. Retraced back to neutral, and now a little bit more bearish, so this will counter this, and overall our activity in the overnight session is fairly neutral, 50-50 long and short. I'm not expecting a huge shock and awe open. We're opening inside of a very compressed range from yesterday. Nothing about the chart right now is screaming that there's an early morning imbalance that needs to correct, right? Nothing about this is saying that there's opportunity for early morning trade. I believe we also had some news. I can't remember what, there was something that came out. Retail sales, maybe it was. Someone can correct me. I'm not going to open the economic calendar back up, but there was something at 8:30 that came out here. That's besides the point. Opening in range, not expecting a whole lot of shock and awe. We're opening in this big balance area. Yesterday was extremely compressed, and we can see that on the market profile here. So heading back on over to this software, this one's going to be very telling, just in the sense that you can see this is going to be a very nuanced level right about here. We have an overnight high stacked with a poor high on yesterday's profile, and before this little down move, it was also the overnight halfback. Now, again, we can't use that now that it's not the case, but it's just interesting that we have all of this data stacking up at that 44.65-ish area. If we can take out that high, I would imagine that there could be a run up into here, right? This is where the next chunk of value essentially is. If we're firmly going to be moving away from what we have down here, and it's going to be a move higher, this area of value is the next target, right? We had a double distribution from last Friday. We would look for the point of control that would be somewhere up here. Now, granted, the yellow line's down lower, but if we had to pick one out from up above, I would start saying it's somewhere in here, close to 45.10, 45.15. Those would be upside targets on a breakout up and over here. But as we know, I don't want to be overly biased in terms of direction, especially as we move throughout the course of the day, simply because we have good old JPOW hopping on the mic around 2 p.m. 2:30 is when his press conference is, and usually it's the press conference when he actually starts talking when we see the larger amounts of volatility. That's when the news reporters can ask the really nasty questions and say, hey, let's confront this guy. What do you actually think about inflation? And he's forced to give some sort of answer or sort of dance around the question, right? And that's telling in terms of his feelings, right? So that's really where we're going to get the volatility. Just as a reminder, that's 2:30. I've already ranted about it once, but I would recommend that you are flat for that announcement. We're going to get a lot of volatility and not necessarily know what direction it's going to go. So accept all of the risk that you have on the table when 2:30 comes around. Be prepared for that, okay? So those are ES futures in a nutshell. Again, traditionally speaking, whenever we have something that's slated to be opening like this, we look for the structural trade to develop later in the day instead of earlier. But given the fact that we have FOMC, I'm not sure I would even be pushing it after lunch, right? Generally speaking, we'll go flat, we'll go sideways in anticipation. FOMC will come out around 2 and it'll be something crazy. Again, this drawing is not indicative of what I think it's going to be. I'm just illustrating volatility. Simple as that. All right. So Yes, Anthony, he actually is speaking. Usually after all of his press conferences, or actually after all of the meeting minutes releases, he has a press conference. It's almost every single time. If I'm mistaken, then I apologize, but I would imagine he will be speaking at 2:30. Let's continue along and talk about our sectors here for our S&P. So we're going to crack into our regular charts here. All right, it seems like people don't think that there's a meeting today. Well, if there is no meeting, then maybe we don't get as much volatility. If there is a meeting, obviously expect some volatility. I would just keep it as simple as that. In general, just be aware of the 2:30 time frame, okay? Thanks for the information, by the way. You know, guys, if I'm ever wrong about something and I'm not and I'm not speaking that in the stream, let me know in the chat. Again, I'm not perfect. I don't know about every single economic event. So if you've got an upper hand in terms of insight, let me know. I'd love to hear from you, and we can all go from there. Anyways, back to the charts here, talking about Xlf Financials. What do we have here, right? It's holding support. You can see we came in, we held that 39.26, nice consolidation day up at the top. If we zoom in, Forex Factory has the calendar, no speech announced at 2:30, only the meeting minutes at 2 p.m. Yeah, I think that's how they always do it, Stephen. I think they never, put his press conference meeting on at 2:30, but that's besides the point. We'll leave that one. We'll consider that settled for now. There may or may not be a press conference. I'm leaning towards yes. Some people in the chat are leaning towards no. We'll see. In terms of the XLF, though, what I was getting at is a hold of this area. Notice the bullish price acceptance higher above yesterday's range. If I just scrunch up this 15-minute chart, you'll notice we're sort of hanging out up here, right? So that's bullish price acceptance away from that area of support. So again, any reversals underway in your big bank names, MS, JP Morgan, WFC, Citi, Bank of America, all those guys, still have a little bit more confidence that that reversal's underway. Certainly moving a little bit lower in the pre-market. Not the most ideal thing, but given the fact that we are higher, it's not the end of the world. I would really only get concerned in financials and banks and the fact that this could provide some drag on the S&Ps if we come down for an equal low and test 39.25. As long as we're above that level, I think things are fine. Even if you wanted to be a little bit more conservative, as long as we're above 39.90, coming from this little dead cat bounce high, things are fine in the XLF, not going to provide too much drag in the S&Ps. XLK is up next, of course, for our tech sector. And what do we have in here? So tech sector obviously recaptured that 156 the whole dollar that we talked about in yesterday's stream, made the close higher. We're back inside of this area of balance right here. Now, obviously, we're going to be very, very sensitive to the FOMC in both the XLK and the XLF and what they decide to do with interest rates. So again, if you want to be trading these names, specifically banks and tech, I would do so before 2 o'clock and not push it after 2 o'clock. It's as simple as that, guys. You're going to get a large amount of volatility. If you're interested in holding through that, if you think you're going to nail the entry, that's fine, but accept the total amount of risk that you are essentially taking on as you move through those announcements, okay? So XLK, the chart does look bullish from a technical perspective, but again, we have that wrench thrown in the mix with the FOMC. In the after hours, we're sort of opening mid-range here. Again, not a whole lot of shock and awe. Nothing really strikes me as an overly aggressive trade to take one way or another. I would just say from the overall daily perspective, we're back in the midpoint of the range essentially, right? So whenever you're in the middle of the range, it's usually not where your opportunity exists. It's usually at the upper edge for a breakout or mean reversion, or the opposite down at the bottom, mean reversion or a breakdown. It's as simple as that. And in the middle, it's 50-50, whether or not it's higher or lower, especially when you have a big catalyst like our FOMC coming out at 2 p.m. So tech, I don't know. Again, it would strike me as being more bullish because we have recaptured this and we've closed inside of this micro balance here. But from the longer time frame perspective, I'm still just feeling a little bit neutral about this one, I suppose, being so middling inside the range here. Next up, we're sort of done with our sectors. Let's continue into the QQQ. Let me actually just show you the S&Ps rather, if this would load here. Thank you. Let's see. In our S&Ps, the thing I wanted to point out here is the fact that we have firmly recaptured this area, right? And again, just like in the XLK that we just saw, the tech sector of the S&Ps, we're still in the midpoint of the range. Don't get me wrong. From that perspective, it's a little bit more neutral. But for the short term, the fact that this has turned into a look below and fail, now accepting back above this level, back inside of this little balance here, again, from a technical perspective only, barring the FOMC at 2 p.m., we would think that the target would be here at 451.83. Again, FOMC puts a huge wrench in the mix here, and I'm not overly confident in saying that, but if I were only looking at the charts, saying, fundamentals don't matter, nothing about what Jerome Powell says will matter here, that's what I would be thinking about. And we'll see, right? As of right now, in the pre-market, as we've discussed, we're moving towards the lower end of yesterday's range. If that breaks down, we're once again underneath that critical pivot point at 443.50. So to me, it's not really looking like an easy trade off of the open here for any sort of inventory correction. We're in a very, very tough spot, especially with these catalysts. So I would sort of lay off the gas this morning instead of pushing it one direction or another. Let's continue along with the broad market, talk about the QQQ. This one also recapturing, you can see here, that critical pivot point close to 354. And what do we got, right? So again, from a pure technical standpoint, we would expect something like that to the next resistance because of the look below and fail. This one's a little bit more bullish in the sense that the pre-market rollover that's occurring right now is nowhere near the lows of day. Now that could happen by the time 9:30 actually comes around in about 17 minutes. So that's a possibility. But as of right now, a little bit more relative strength than what we see in the S&P 500s. Next up, we're going to take a quick look at the IWM. This one probably the most relative strength out of every index that we've looked at so far, pulling back the least into the prior day's range, respecting the opening range from yesterday in here, at least as of right now, that level is 205. If we open above 205 and put in consolidation here, I would look for just sideways activity into the FOMC. Again, once we get closer to that area, it's not really like, or that time frame rather, it's not really like we want to be pushing it one way or another. Today's sort of a good example of knowing when it's a good idea to be aggressive and when it's a good idea to not be so aggressive, right? If you have all of these factors of uncertainty and your main objective in the marketplace is to not lose money, right? You don't want to sort of push it in these types of environments. So that's how I'm looking at today, quite honestly, given the fact that the charts aren't screaming any obvious setup as of right now. So hopefully that's a valuable takeaway in the sense that, not every single day is a day where we're going to come into the market and say, all right, it's time to make, $500, $1,000, $2,000, whatever your personal goal is on the upper end. It's not always that type of day. Let's get into our core list now. Apple, again, sort of not really showing us too much from a technical perspective. I do like the recapture of the bottom end of this range right here. Pulling back a little bit, not as aggressive as what we've seen in some of the other broad market sectors that we've seen so far. So maybe this is the name that if you're looking for relative strength, there's the rotation up and over to yesterday's high to the top of the flag range on the daily time frame. That's something to watch out for. Next up, we're just going to quickly move through these. Netflix, not a whole lot going on here. What I do think is interesting, and it's sort of off the table now, is that we had two-day highs stacking nicely at 409. Obviously, we're pulling back a little bit more aggressively to the low of yesterday, but if we want to consolidate further in this range, basically all we're getting at in Netflix is can we get a breakout of this range? We've already experienced a look below and fail, so I would say that, the sellers had their opportunity here. They let that one pass. So I would start to lean a little bit more bullish, but as you know, the theme of today's video is that we are not sort of pushing it in a market environment where there's uncertainty. This, of course, will be impacted by the FOMC. Now, as much as a financial company or Apple or one of those big names, not necessarily, but there will be some volatility here in Netflix. Let's continue along, talk about Tesla. Tesla's at the top of the range, right? And by range, I don't mean the daily range. I meant the intraday range from yesterday. And as of right now, it looks like the broader marketplace is pulling back a little bit into the open. So as I was sort of setting up the video today, we were holding above that 920. The fact that we've now pulled back underneath it starts to have me thinking at least a little bit that look above and fail is kind of occurring here, that we could not hold up and over the top end of that bull flag range from yesterday. Now, this is like a picture-perfect pattern, belongs in a textbook. If we open sort of inside of it, fine, look for continued consolidation and maybe a break can occur back up and over 920. But because we failed twice in the pre-market, that's going to be your target, right? Don't push it to the upside here in Tesla. You're probably only looking for 927 quarter on the first target. You can take off, half the position here, maybe 3/4 of the position, then monitor for continuation, see if we can make it to the top of the daily range. But that's the setup in Tesla. If it takes out 908 to the downside, sort of off the table, we're out of the bull flag consolidation, and 900 becomes the next critical support that needs to hold. In terms of setups off of 900, I would want to be a little bit more patient, to be honest with you. From the daily perspective, if it forms something like this, so now a hold of 900, so let's just say that today we printed doji, something like that, then fine. Maybe we're accepting back inside of the range. The trade would still be on up and over the 2-day highs to rotate to the top end of the range at 943, but that's very speculative speaking, right? We're not even there yet. So one step at a time in Tesla. For today, if we open in the flag range, 920 is the breakout point for a 7 delta move into the overnight highs. From there, monitor for continuation as always. We're going to skip over to Facebook now. This one, I'm not sure what the news is or what there was for news in the after hours or, pre-market here. Let me know in the chat if you know something that I don't know. Facebook is one of these names where it's extremely sensitive to, everything going on with Google, everything going on with Apple, of course, because of the iPhone installations and all that stuff. It's sensitive to the government and restrictions of, privacy. It's sensitive to, chip manufacturers and whether or not, people can get tech in their hands in the first place. So Facebook, I don't know what the news is here, but something happened that people are not liking. It's a lot of the social media stuff. ABD, thank you for the clarification in the chat. Looks like they made the tracking harder on Android. Google made the tracking harder on Android. Looks like Roblox earnings are taking a drag on it as well. So something to do with Google, right? So we were kind of along the right lines. We just didn't know the exact headline. Regardless, big gap down as of right now, and that's going to put gap rules into place. Now, because of the uncertainty in the marketplace and because the market's not cleanly trending to the upside, I would say be careful about this. You need to be a disciplined trader if you take this setup here. Let's walk through it briefly. We're going to, of course, want to know where the overnight low is, yesterday's low, and the forecasted opening print is basically at the overnight low right now. It could even continue lower. Basically, if we fail to find new sellers under the overnight low and trade back up through the open, look for the gap to fill, okay? But the stop has to go, must go. There's no ifs, ands, or buts about it. Must go underneath the low of the day if you're playing this inventory correction. Paul, I'll get you the Discord link in just a minute. I know it seems that link has expired. If someone else wants to send it in the chat, that's fine. You can head on over to our Discord and send the link. That would be great. So Facebook, there's your inventory correction on the gap down. It is sort of negating the daily double bottom pattern, even though we printed a nice hammer candle yesterday. That's off the table, obviously, with this news that came out pre-market. So kind of a nasty move here. We'll see if we can get some inventory correction, if we can get a little bit of a move from this overreaction back to the upside. That's the framework that we're going to use in Facebook. If it doesn't, right, what's the next support below? We know we have 207, all right? So underneath, if we put in like a bearish acceptance pattern, descending triangle, and the broad market's pulling back hard, breaking down out of yesterday's range, look for Facebook lower into 207, right? So two ways to trade it. Obviously, you're going more with the trend if you try to play the downside in Facebook. Let's continue along, talk about Nvidia. Obviously, earnings coming out after the bell today. This is going to be a big name for a lot of people to watch. This resistance trend line is going to be very telling. We came slamming into it in yesterday's session, currently opening just below it. If we can, first of all, I would imagine we kind of go sideways in limbo into earnings. And then once earnings comes out, the question becomes, do we take out the trend line to the upside? And in which case, I would expect a pretty large rotation to the upside, given the fact that we're breaking a pretty significant downtrend. Or do we remain underneath? And I would probably start looking at this, at minimum, the 240 area. What's the market maker move on this thing? If we come on over to the trade tab, looks like about $20 move here in Nvidia. What do we have here? Okay, so for a $20 move to the upside, let's just round off here. Say we're trading at 265, 285 puts us in here. Again, right above that critical area of resistance that we just discussed. It would be over the resistance trend line coming into the next area. 287, that would make sense. Again, this is going to be more applicable to tomorrow's open as opposed to today's. I'm just trying to get a sense for where this may head. And then $20 to the downside is obviously 245, putting us right above this flush point. So if it's a downside move, then this is the critical area, obviously, right? 240. If we do something like this, and then consolidate here, building a massive flush point, not looking so great. We would look for the rotation lower into the daily support trend line, right? So that's the downside case in Nvidia. In terms of trades for this morning, again, where are we opening? Kind of right at the top of yesterday's range. Feels more bullish than bearish, especially with the move from yesterday. So early morning, if we can take out the overnight high in Nvidia, that's going to be your trigger point on this one. If we can take out 266, let's just round up, call it 267, there's an opportunity for longs, especially noting we're breaking early that resistance trend line. There is significant overhead resistance at 272 quarter coming from all of these touches here, so be aware of that, but that's definitely an available scalp in Nvidia. An 8-point move, or let's round down here, let's call it a 7-point move, definitely something worth watching for. So that's Nvidia, and obviously earnings will be the big fireworks after the bell today. Let's finish it off here in the core list, at least with Microsoft. Then we'll get into some interesting ideas. I know we're sort of getting there on time. It's 9:22. So what do we have here? It's all about 300, right? We did accept back above yesterday, but clearly in the post-market, pre-market, we're coming off a little bit, okay? So 300, 375 cents, 301, this area is going to be your must-beat area. If we can get up above that, we're looking for the rotation to the resistance trend line. If we can't, and we just, roll over again here off of 300, then what do we have from the daily? We have a break, retest. The target should be the low end from in here for an equal low around 293.50. So I would say if Microsoft puts in any sort of bearish pattern off the open, bear flag, anything that basically sets up a breakdown of 297, you're looking for this move to capture here into 293.50s. Okay, that's how I would start thinking about Microsoft to the downside on a break and retest. If it captures above 300, probably a patience play. If there's some sort of setup that unfolds intraday from a structural level or some sort of pattern, then you can look for the resistance trend line. But just because we recapture 300 with acceptance, so let's just say we start going sideways up here, wouldn't really strike me as like a long opportunity staring us in the face, right? So that's Microsoft. Amazon, anything going on here? Not a whole lot, right? We're chopping around. If you look at where we are on the daily chart in this box, again, smack kind of in the midpoint. We're chopping around through 3 days worth of range. There's nothing going on here in Amazon. Nothing to really harp on there. All right, so that does it for our core list of companies. Now let's get into Roblox, which of course some people are saying had RB, there's the B, LX, there we go, had some impact on Facebook earnings, clearly, with the whole metaverse thing. I wouldn't be surprised. Omar, I don't have VWAP on my charts right now. I do use it on an intraday session. Watch, if I click on the Studies tab, Load Studies, 5200 VWAP dot, that is my sort of setup here. The pink line is now the VWAP, okay? I just keep it turned off in the post market simply because I want to eliminate some distractions, make the charts easier on the eyes. That's all there. So yes, I do use VWAP if you were curious about that. Anyways, earnings on Roblox giving us a gap down, taking out the initial volatility low on this most recent leg lower. I'm not sure if they issued guidance closer to 830 as opposed to yesterday. Regardless, we're going to be opening on a gap down. Let's adjust our levels here so we kind of know what's in store. Overnight low is now here. Forecasted opening print is now much closer to that. So as always, we're looking for a failure to take out the low, trade long back through the open. Your target is going to be this area of acceptance from the overnight before the gap fills entirely up to 66.50, okay? So the target, firstly, if I just go ahead and throw this level on here, is here at 61.35. To be quite honest with you, because it's gone for a second leg lower now, something like this, I'm not overly... I would say I'm not overly confident in the reversal trade here. If it wanted to hang out up here and just go sideways into the bell, yeah, that's where maybe you get a little bit of inventory correction. But this secondary push lower starts to make me think that, hey, people are actually, they're really not excited about picking this up down here on quote unquote sale. So if it does go lower, I would start to use this pivot low from the daily around 53.63 as the next level to pay attention to. So if we go lower and we start printing hammer candles down around 53.73, maybe there's a reversal back up through the open to then get us into the gap, but that's a longer term thought, okay? And don't forget, just because I haven't mentioned it in a little while here, FOMC is still on the table for 2 o'clock. Don't forget about that, okay? So once lunchtime comes around, I would start to tighten up any positions you may have, okay? ADU, well, I'm not even sure how to say the name. I apologize for that in the chat. I'm terrible with names, by the way. I'll try to get better over my course of doing live streams, but where's gold heading? I don't know. Okay, we'll take a look in a second here, but we've got 4 minutes to go till the bell. Viac is the next one. What do we have here? Earnings, big gap down, obviously. So there's possibility for inventory correction on this one. We're going to map out today or yesterday's low, the overnight low, forecasted opening print, somewhere in here. So again, we're opening at this area of support. I actually like that about this one. So there's potential for a rotation higher. Just note that this isn't like the best mover. It's obviously not, it doesn't have the best options chain either. If I do something like this, the open interest is okay on the call side. You can see that there are some big chunks out there. Those are probably, big positions that someone has. But in terms of the spread, it's not great. Even the at the money strike right here is what, a 40-cent spread. Not great. I would probably just trade the shares. But if we get some sort of reversal higher, the first target's going to be right in here. Okay, so the 50 SMA, 3250s is probably where I would look, just based on all of this consolidation in there. It's also about a half gap if my eyeballs are calibrated today. So that's what I'm seeing in Viac, obviously gap down. If there's inventory correction, those are the targets. If it's lower, this is your line in the sand, closer to 28.75. Next up, we got to keep moving here. BP for an oil. company. We have a gap up after a hammer. So this one's actually looking fairly attractive. We have the hammer. We're taking out the high. You can see that right here in the consolidation in the pre-market. I would say as long as anything holds at 32 quarter, basically anything holds above yesterday's high, look for longs. Okay, we're looking for that essentially pullback to pan out from the support trend line. Perfect hammer off of it. Anything that goes like that, target's got to be up here. Right, so this is looking like a great opportunity inside of BP for some longs up to 33.67. Next up, we have Upstart, UPST. That was another earnings play here. Gap up instead of down, like many of the things we've seen so far. And what do we have here, right? So pulling back a little bit, opening more towards the midpoint. I would say that this inventory correction is already significant enough where I wouldn't be overly aggressive looking for some sort of gap fill on this. You could play it, but now that we're so far away from the overnight high, makes it a little bit less attractive, right? So what are you going to do? Let me just remove this level. Are you really going to risk that up there to trade for that down there? I mean, maybe, but I don't really think that this fills the gap all in one day. So Upstart, you can watch it, but for me, it would probably only be shorts underneath the structural lows from the overnight level here, close to 131. If we break that, then start to look for the gap to fill. If we take this out right here, so these are just more nuanced levels as we head into the bell, essentially. If we take this out right here, 138.60, that's where an upside move could be produced into the overnight high. Just watch out for those two pivots, okay? I'll throw this one on as well. Again, that's 131.30. Anything in here, chop, consolidation, you can see that's where we're getting the overnight price acceptance. Let's continue along. We have TTD and, TTD, not YTD. There we go. And what do we have in this one? Gap down. What I think is interesting about it is that we're opening towards the lows of these flags. You can see that in the after hours, we're getting price acceptance down here. So if we can hold this on the open, that's the main thing to watch out for. If we can hold 76, maybe there's a rotation back higher. If we break 76, look for the move lower through this area of poor structure here. Next major support is 64. I'm not saying we flush there and get there all in one day, but it would be a bearish implication breaking down from this bear flag after earnings, of course. We're going to speed things along here. We've got about a minute to the bell. SNAP for Snapchat, obviously a sympathy move to Facebook currently. What I thought was interesting about this one is that we had nearly a perfect pressure cooker top on the daily time frame that was forming here at 42. We're currently, moving far, far away from that. So as of right now, kind of in no man's land. Notice that these lows are all uneven, so we don't have support to be playing off of right now. I would be patient inside of Snapchat, not necessarily look for downside or upside, noting that we're going to be opening fairly close to all of these supports in here, right? It'd be a different story if we had clean bull flag consolidation with a bunch of equal lows. We were opening below it. That would make things easy. It's not easy, right? We have all of these lows that we have to contend with. Doesn't look like something that I would want to hop on the bell, but I did want to point out the gap up. 10 seconds to go until the bell. We're kind of just going to hang early or a little bit over rather, just because, I think the move on the open is patience. Let's quickly check in on the futures. Yeah, we're still inside of yesterday's range. There's the bell. This is a patience play, right? Whenever you get something like this, the play is essentially wait, be patient, wait for the structure to set up, and not necessarily an inventory correction off the open. I'm just going to round out this the last couple of trade ideas for you guys. On NEO, what I was thinking about here was, of course, before this sort of morning pullback occurred, we had equal highs up around this 25.90, 26 area. From the daily time frame, you can see if we recapture 26, it's the gap fill overhead to 27.20. So that's what I'm thinking about in NEO. Obviously, any pullbacks here want to hold the primary neckline of the pattern from the inverted head and shoulders, this one in here, around 25, right? So that's NEO. And then SHOP is the last one, SHOP. And what do we have in SHOP? Clearly a gap down, and it's already continuing lower. Okay, so we had this support, this wedge kind of like this, gapping down out of it, not looking so hot. And you can see we're already moving lower. Now, this is not something that I would have traded anyways. If you come look at the options on Shopify, I mean, these things are spready, right? You're talking about 25.40 by 35.40. So a dollar spread, I don't know. To me, it just doesn't make sense. Look at the volume that's going through here on the call side. Horrendous. The open interest in the call, volume on the put side, still horrendous. $5 spread on the at the money strike here. Doesn't make sense. Obviously, with earnings, there's a lot of volatility. Just not the trade for me. In terms of our ES futures, we'll leave this on here just a little bit longer. Let's just leave it up for a little while longer here and see how the open unfolds. I'll sort of give you guys my thoughts as this is making its way. Usually what I do on the open is I'll pop this back on over to the internal screen, and we'll just monitor how the internals are opening up, right? So here's just an example of how, I don't want to say a typical day goes, but this is what we're looking for, right? So on the open, we're resisting at the value area low. We should adjust the overnight low because that did change right up until the bell. There we go. Adjusting here. Ticks are opening negative. Our breadth is negative on the open. You can see that up here, top left-hand corner, both negative reads, but they're not overly negative, right? We're not looking at -3, -5 reads. They're definitely reasonable, almost at parity on the NYSE. And in the advanced decliners, right, kind of opening right at -500. Usually when you're within the range of 500 and 0, somewhere in here, it's not really telling you a whole lot about the marketplace, really more neutral as opposed to, more aggressive trend. Like this is clearly trend to the upside. If you're opening down here, that's clearly trend to the downside. Being kind of in that 500 range, net 500 positive or negative, it's not telling you a whole lot about the direction of the marketplace. So that's what I've got. Currently trying to poke back up into value area low. If we just take a look at our futures here, let's see, we're thinking about trend, right? And when we're thinking about trend, here we go, right? So lower highs, lower highs, lower highs. The question is going to become right here on this push into value, do we produce a lower high or do we break into it and make equal highs up at yesterday's high? That's the big question, I would say, right now in the ES futures. If we can start getting some acceptance into value area, then what I would look for is probably some sort of pullback that then holds it, confirms it as support. Then we can go for that equal high, noting that we would then be making a higher low, right? From here to here, that would be the start of trend reversal. If our internals can perk up, if ticks can get positive, as long as this does not go more negative, so note the difference there. This doesn't have to get positive, but as long as it doesn't get worse, we'd be willing to take that pullback trade here. If the ADDs come into 0, again, more of a neutral signal as opposed to aggressive trade one way or another. So that's kind of what I've got for you. I'm going to let the open pan out here. Let's quickly take a look at some of those movers that we wanted to keep an eye on. Apple pulling back. Tesla opening inside of the consolidation. Okay, so what I do in a case like this, we're going to set up an alert right here. At or above is fine. Create, and if that goes off, we're going to be willing to trade Tesla. That's as simple as that on this one. And if it takes out the low end, we know that the trade's kind of off, as we discussed in the pre-market write-up. Apple pulling back. Facebook, look at this, beautiful. Okay, so this is exactly it. This is not the trade that I'm going to take, especially because I have a longer term position here. I tend not to trade whenever I have a longer position on something. But look at this, did not find any acceptance under the overnight low, went up to fill the gap, right? That's what we talk about when we get an emotional reaction and then we correct that inventory. That's a great example of it here inside of Facebook. Futures poking back up into value area low. That's looking a little bit more promising. And Tesla looks like it might go off over that 920. A little bit indecisive. You can see that we have a large upper and lower wick. Just like that, futures are back down underneath value area low. And again, this is a day, as we were pointing out earlier, that we know we're not going to be pushing it one way or another. This is not a day for aggressive longs, and it's not a day for aggressive shorts. If you want to guess and you want to take a gamble in here, you'll look like a genius, that's for sure, if this thing rips 100 points higher. And you'll look like a genius if you take a stab short and it drops 100 points as well. But the odds just aren't there. So as this open sort of pans out, I guess I'm just going to I'm going to sign off. We know what we're looking for essentially. We know what to watch. Primarily in Tesla, that's the big one to watch right here. Does it remain in the flag range or not? And in terms of our futures back over on this screen, if we can't accept inside of value area up here, it's kind of just a patience play. The next short trade is underneath yesterday's low of day to start filling the gap underneath. You can see that on the SPY, right? If I do something like this, zoom in here. If we take out yesterday's low, it's all about the gap fill underneath, correct? So that's what we've got in our little pre-market prep here. If you enjoyed today's video, the stream, let me know in the chat. Either drop a thumbs up, let me know, hey, thanks for streaming, whatever. I love to hear the feedback always. VPaul, I will share that link with you right now, actually. So let me do that while we're waiting. I'm going to grab an invite, if I remember how to do this even. Server invite people. Let's copy. Oops. Let's see. Copy. Maybe I have to do it on a different stream. All right, guys, I'm going to mute the mic. You guys know the deal. Again, the stream will probably cut out. I'm going to call it here. Trade safe. Don't do anything I wouldn't do. I hope to see you in the Discord. I'm going to leave the stream going. Don't worry, VPaul. I'm going to get you that link, but I am going to mute out. And I'm going to close the stream off in just a second here. I'll make sure the link gets in the chat. Safe trading, everybody. Be careful for 2 p.m. Fed announcement.